Hi guys, daily bias is the most important thing that you have to look at the market. It tells you where the market can go and what to expect in the next day. So, as you can see in this example here, we have a bearish candle and then we make a bullish candle creating a new higher high in the market and does not create a new lower low, holding this previous low and creating a new lower high. So, as you can expect in the next day, is that this candle opens like you can see here, opening price, and as you can see, the price opens here, goes to the downside, creating a wick, and then expands to the higher side. Okay, creating a new higher high in the market, leaving a new lower high on the market. So what do we need to position ourselves to benefit from it? Okay, if the price it's below the opening price or midnight open as I call it, um, I would I would expect to enter with higher lot size. Okay, because this is considered a A plus setup. If the price is creating trap traps on higher than the opening price, it tells me that we do not have momentum to our side. Okay, we can enter, but with a smaller lot size. Okay, with a lower risk on our trade. So where do we need to position ourselves? It's always below midnight open. Okay, soon as we find the sentiment to the next day, if the price is below opening price or midnight open, okay, we can start searching for entries. Okay, and after this, as you can see, we need to mark up our liquidity or POI, points of interest. Okay, for us to see a liquidity trap and then goes to our side. Okay, as you can see, it's not that hard to understand, but I have two examples for you guys. Okay, uh, some people tell me like, okay, we have this example here because some people is telling me I want to um, I want to sell in this candle, in the first red candle or black candle, because I have a POI up here on the higher time frames. But for me, I would have expected that this candle, like closing here, like this, or can be like, okay, like this, and then we can push this below. I think for me it's too risky for us to enter on this first red candle. Okay, because it's too much exposure. It can work, it could work, because but for me the best entry would have been here in the second red candle. Okay, because now we have momentum on our side. We know that the market is trading lower and is still risky because we created a new higher high, we created a new lower low. But for me to enter, I need to expect like in here. Okay, we created a new lower low, leaving a new higher low, and then for us to position ourselves in the right side. Okay, so without further ado, let's pass on to the examples that I have here on gold. As you can see here, gold is trading higher here, but then in Monday we have not created a new higher high, not creating a new lower low, so we have to wait for the next candle to give us the daily bias for the next day. Okay, we have this white candle. Okay, it's leaving a new lower low, but as you can see, for me to expect bearish momentum, I would expect the candle to close bearish and then to break below this. Okay, so I have seen that we create a new lower low, we create a new higher high, and look at the size of the candle. The candle, it's telling me that sellers will are trying to push the price down, and then buyers came up and won the battle to push the price higher. Okay, so the next day, all I wanted to see is what I told you guys. Let me put this white, creating a wick, and then we have midnight open here. The candles look like this, and then creating and leaving a new wick, creating a new lower low in the market, and expand higher to this previous POI. Okay, we left this intact for a reason. We didn't sweep, we sweep before and then we respected. Okay, we know now that we have liquidity to the upside here. Okay, it's my expectation for the next day in here. Okay, so I'm gonna pass to 15 minutes. Okay, maybe 30 minutes. Let's see. Let's move forward with the market. Okay, we have our midnight open here. Let's draw a line for us to know. I'm gonna put this on red. This is our midnight open. Let's add. Okay, we have midnight open here. So I would expect the price trading below this for us to take advantage of it. Okay, so let's see what we can have here. Okay, we swap all this liquidity here and move up. Yet again, we swap all this liquidity here, and then I expect that there are no more liquidity to get taken here. Okay, so let's draw this as our POI or possible interest point, POI. Okay, we can mark up this as well. So let's see what the market can bring us. Okay, we have a sweep on this here, so I expect that we do not have more liquidity to go to the upside. Okay, So let's push forward the market. Okay, we are trading below. Let's draw a line where in London opens. Okay, we sweep this here, and then let's push down a little bit more to 15 minutes. Okay, we have a reaction. That's good for us. And now what we need to see is, okay, we have a break of structure here. So I expect then trap buyers entering the market here. Okay, so we have left this liquidity on 5 minutes here, as you can see here, intact. Let's delete this. That's not what happened. Okay, we have this liquidity block here, and let's put a position here, and then our stop loss like here. Let's see what the market does. Okay, let's see if we trap buyers over here. Okay, we have a reaction here and going to the upside. Let's see if the market comes back and then push up. We have 2:30 market open. Okay, and then we move up to the upside. Okay, let's look at this like, okay, we have break of structure, liquidity block over here. As you can see, if we put the position over here, we can push the price higher. But I don't like to enter in this specific way, because I need to see an engulfing candle or inverted fair value gap on 1 minute. So let's see what we have in 1 minute again. Okay, what we can see is we have a break of structure here in 1 minute. Let's delete this for us to see in a better way. Never forget that this is happening below midnight open. Okay, if we can expect market to push higher on the price to create a new higher high, it has to happen this below midnight open. Okay, so let's see. Break of structure. Okay, inducing buyers. Sorry, we have here inducing buyers like in here. Okay, we have induced buyers, we have trapped them, and then I want to see we are in the 5 minutes order block, liquidity block, sorry, and then all I want to see is an inverted fair value gap to get taken. Okay, we have this one over here. Let's put this on a different color. We have this inverted fair value gap. Okay, and then we inverted, and then we can push the price higher. My stop loss could be here, but I like to put in the previous lower low. Okay, so let's push the price. Let's see in 15 minutes what we are doing. Okay, what do we want to target? It's this, but somehow I don't think that we could go over there in the same day. Okay, we are talking on 5,000 pips. That's well a lot for gold in the same day. Okay, but we have this trade, and we can going a little higher. We have this previous liquidity here, here, and here. We can target here, as you guys can see to the left. We have taken out, okay, and this could be our full take profit. Okay, or if you want, you can have a runner to the 23438. Okay, to the higher time frame POI. Okay, let's push the market up. Okay, we have a little reaction to the downside. As you guys can see, we have made a new breakout structure, and we have a new day coming. Okay, as you guys can see, we are still in the position, and maybe you can have this on previous daily high. Okay, it can be your full take profit for the day. Okay, and then all all we wanted to do is let's go again in the next day. Okay, let's push the market back so it doesn't give us the next candle. Okay, uh, sorry guys, eventually it would appear. Okay, as you guys can see, we created a new lower low, and we created a new higher high. Okay, so we are expecting the market to expand a little bit higher than this. Okay, so we can have this POI get met in the next days. Okay, so let's push the market to 30 minutes. Okay, we have the line of midnight open over there as a session, beginning of London session. Let's push this here. We have liquidity taken here and move to the upside. Same again. Okay, we sweep all this liquidity here and go to the upside, so we have more liquidity here. We can consider this as equal lows. So let's mark up this one. Okay, 11 o'clock. Let's push the market a little bit further. So let's dissect this. Okay, London opens and we have the price near approximately at the same price of midnight open. Okay, and we have the price pushing higher and then getting back to the downside below midnight open. So we have this POI marked up, and let's dissect this on lower time frames. Okay, Same again, we have this low respecting with this low respecting this, so we marked up the right PO high. Okay, for you to understand, 15 minutes, we have this equal lows respected, and then we swept and move, and then we got this previous, as you can see, we have this previous 15-minute candles swept and moved to the upside. This respected this, so for me, I expect that we have liquidity right now here. Okay, so let's push down to 5 minutes. Okay, we have the price over here, and as you can see, BOS in the market, we induce buyers here. So let's push this forward. We have London opens, we have London opening, closing at the high, and then we have New York open, pushing the price back below our midnight open. If you guys want, you can put a buy order here, stop loss at this point, and then push the price higher. I don't like that. I would like to go down in 1 minute, inverted fair value gap, as I told you before. And as you guys can see, we have BOS in the market. You can see this as possible trap here, possible trap here. We have reactions here, and then we trap buyers, early buyers in this case, and then our entry has to be here. Stop loss at the lows, and then let's see if we can target this PO high. This could be a possible point for you to partials. Okay, 5 minutes, and then push the price even further for our full take profit in here. Okay, look, we have the entry exactly at the midnight open. This could be not a plus setup, but maybe like a setup, just that. Okay, but still we have movements happen below midnight open. Okay, and as you guys can see, the price end ups, we could partial here and then leave a runner to the upside. Let's see if we can, if we hit our PO high, higher time frame PO high. Let's pass this to 30-minute time frame. And as you guys can see, in the next day, the same thing happened. We have price trading below midnight open, Okay, we have trap early buyers. As you can see, we have sweep this, and then we respect it here. This is 30 minutes. Let's pass down to 50 minutes. See, we have a sweep, and then we leave this possible PO high in 50 minutes. As you guys can see, let's dissect this even further. We have swiped this, so no liquidity here, and then we have a break of structure here, and then we trap early buyers, we induce buyers over here. On lower time frames, we can have a liquidity block here, trap buyers, okay, and then we induce buyers, we trap them, and then we push the price even further. So that's it for today, guys. I hope that's gonna be useful and helpful in your trading, and see you soon. A lot more videos to come, a lot more information to come, and stay safe.